Good morning and welcome to Beyond the SEAF Model. My name is Jack Kosar. This is effective for June 24th, 2024. Let's get started. Our SEAF signals for this week are technology, communication services, and real estate. Both real estate and technology being holdovers from last week. Uh, us re-adding communication services as a signal. The big takeaway here from this table is really just technology coming strong with ones across the board at a ranking of 3. Communication services being relatively strong with 2, 2, and 3, and a total score of 7. And then real estate holding up the bill with a 3 on the trading week, 4 on tactical month, and 5 on the strategic quarter. What this table doesn't tell you is that the net expansion for the entire table is mostly just driven right into technology. Looking back, kind of switching over to a heat map, looking back, going for the last month, technology is really the only sector that we're seeing major growth in. Um, I believe it is up. It was the only net positive in terms of flows for since the beginning of June. So technology is really where it's at. Communication services was a bit slight positive. This is showing closer to yellow, but this is a positive for communication services. Outside of that, we're seeing kind of negatives across the board. One kind of key point that I heard over the weekend when I was doing some financial listening was in terms of the returns for the year. I think the S&P 500 has roughly been up about 14% on the year. That number may have changed since I heard this quote, but 5% of that return is driven just based on NVIDIA. The other 5% is the remainder of the Mag 7. So the remainder six stocks in Mag 7, and then the final 4% has come from the remainder of the entire S&P 500. So you really have a majority of this market being moved by only a handful of stocks, and realistically, mostly in technology. So technology being top makes a ton of sense, as that's where the flows are going. We had an abnormally large weekly move at 1.97%. If you've been tracking this with me all year long, we've been seeing some very low weekly changes. Even when we are green, we aren't seeing the really strong moves. Like I said, 1.97% change on the trading week. I believe we had a 3.4% increase in just technology from going from from Tuesday to Thursday of last week, which is more of an increase than we have since the beginning of June. So while the entire stock market looks, as I mentioned, only 4% of the returns coming from the remainder of the stock market, um, technology is strong, and we, following this model, stick into technology because that is currently where the money is going. I think broadly, the rotational space, the sector rotations is struggling when we're not seeing a lot of excess returns in other places. And when it's concentrated really between 7 stocks and a majority of it's between one stock, having that outperformance. But this is an abnormal market. And, again, the other things I'm going to highlight here too with my rainbow charts is both financials and healthcare, as we're going to be able to see in just a second. Here's healthcare. We've been in the avoid, and then really can see here that we've had this relative underperformance going back to the beginning of really, we've had a little spurts here and there, but really going back to the beginning of January. Obviously, we touched here into the favored. We got slight bit of outperformance, but the broader trends really pointed downward, and we continue in that kind of avoid pattern. Heading into our technology. Technologies are, kind of really our driver here. As you can see here, we've had this really nice since we touched down in the beginning or in the mid part of April, really highlighting that since we've kind of climbed up all the way up to the top here in the favored, we are seeing that nice relative outperformance trend. So technology is working. Communication services. Starting head into favor, but like I said, flows were a little bit weaker than I would like to see, especially in that 2 spot. We are seeing a little bit of a trend reversal after kind of being sideways for a little bit. So, ideally we can pick up some of that outperformance as we continue to stay favored. But, look for communication services as we are attempting to stop on a dime here in terms of this slide and relative outperformance. Money's moving into communication services a bit weakly. Um, Sorry. And yeah, just to kind of reiterate here, we talked about healthcare. Financials is kind of in a similar boat. But as we were seeing, most of the money is kind of flowing out broadly out of the market outside of technology, and really driving the strength. But the sector rotation model also tells you where to avoid. And as you can see here, places like healthcare and financials have money really flowing out. Healthcare came out at a negative 0.55%, which is pretty large for an outflow. And then the second one being financials at a negative 0.27%. So definitely money flowing out of there. Um, I think we just need to kind of stay strong here, continue to follow this model, understand that technology is really our leader with our top seven. And if we do get a correction here, that tends to be when this SEAF model can really take advantage of, because when the party does end up stopping for tech, that money does need to go somewhere, and utilizing the SEAF model to find out where the money is going to help you out quite a bit. That's all I have for this week. I hope everybody has a wonderful week, and I look forward to breaking down the SEAF model with you all next week.